Hello, this is Miles Tello bringing you the JD Power Financial Services Intelligence Update for April 2025. This month, I'm joined by Kapil Vora to discuss our latest findings from the JD Power U.S. Investor Satisfaction Study. Welcome back, Kapil.
Thank you, Miles. I'm glad to be back to discuss some interesting insights from the investor satisfaction study.
Well, we're looking forward to hearing them. What stands out most about the results from our latest findings?
Well, as you know, this study covers a lot of ground. One noticeable takeaway is that typically when you think of a DIY investor, we often imagine them as like highly this self-reliant and motivated people. However, what our study finds out this year is that a significant number of these DIY investors are open to seeking advice from a real human financial advisor. And interestingly, even more interestingly, is that this trend is pronounced among Gen Y and Gen Z DIY investors. So that's really interesting finding.
Interesting. So that's the cohort that we'd normally expect would be using digital
Right.
platforms to get advice. What is causing younger investors to seek advice from advisors?
Younger investors often have specific financial or life goals and they aim to build assets, right? Unlike their older DIY counterparts, they're less likely to consider themselves to be experts in financial matters yet. So, they're growing, their families are growing, their needs are growing. So they don't think of themselves as experts as their older DIY counterparts who have it figured it out. And additionally, they feel that the available online information and resources are just not enough. It doesn't cut it anymore for them for effective investing and wealth building. So that's why we see even more, interest among Gen Y and Z investors.
So, what does this mean then for the wealth management firms who have been focused on serving an older clientele for many years?
Yeah, I mean, they have to adapt with the coming times. So they need to continue to push platforms and services that combine digital tools with human advisory support. So it's not just digital, obviously. Human is very, very essential, but they have to combine it seamlessly, offer education around that, and provide tailored resources. And secondly, these younger investors have specific goals like home ownership, asset building, and paying off debts. So firms have to offer product services around that. It's not just enough to talk about retirement and retirement planning and only that which is geared toward your older investor. So they have to and lastly, they have to make it seamless. Ease of use is very, very important. So firms have to, ensure that their platforms are intuitive and user friendly.
Makes sense. So let's talk about volatility. Obviously, there's been a lot recently. Investment firms have to deal with clients who are experiencing that. How does volatility affect the do-it-yourself versus advisor decision that investors make?
I mean, as you can imagine, like some DIY investors, I'm sure, might be caught off guard, but we anticipate that this interest in advice we saw earlier last or later last year is going to go up even more during this, turbulent period. And on the other hand, advised investors will reach out to their FAs more frequently. And the FAs who are already giving like a comprehensive level of advice will already be, having these discussions with their clients. So those clients who are getting comprehensive advice are probably at much more ease than other, advice clients who are not getting that comprehensive advice. So that's what we anticipate in this, tumultuous period.
So, speaking then of the advised firms, who performed well this year in the study?
So the highest firm, which is the award winner in the advice segment this year, is Raymond James, followed by US Bank and Edward Jones. So those are in your number two and number three spot this year.
And how about DIY?
And on the other hand, DIY award winner is Vanguard, followed by Fidelity and T. Rowe Price. So your big brokerages are winning the DIY game this year.
Well, congratulations to the top performing firms once again this year. And thank you, Kapil, for your insights today. Anything else to share?
No, look for other stuff. We are also releasing the Investor Pulse results very, very soon. So those will be also of very high interest to you guys.
Yeah, we'll look forward to that, understanding how investors are reacting to tariffs and the changes in the marketplace. All right, well, Kapil, thank you very much for joining us today. All right, the JD Power U.S. Investor Satisfaction Study is available now. You can learn more about it in the press release link below. I will be back in May, where I'll be discussing findings from our direct banking satisfaction study. We'll see you then.